Oops. Alright, 2 down, 1 to go. I failed the eval. This morning had the lowest volatility I've seen probably so far in all of my trading. I think we've been spoiled with higher volatility, and now it's time to adjust. And I have a couple of ways around that. One concept is the idea of artificially increasing volatility by increasing the time of the chart. Previously, 20 seconds was good to trade to match the volatility. There was a trade in every candle because of the range and the ATR of each candle. This is what it looks like on a 20-second chart, and this is what it looks like on a 45-second chart. So now begins the idea that I will match the time frame to the volatility until you get your desired conditions of 6-point intervals. What does that mean? Those horizontal lines that go across the chart don't actually mean anything. They're just reference lines. So when I say 6-point intervals, I just mean there's 6 points in between each line. I pretty much use that instead of ATR now, just to tell me what volatility is. My preferred way of trading is to try to target just having price go halfway between those lines, because that's not asking a lot of price. It's not about predicting major structural changes or any big directional moves. It's trading the movements within the direction and within the consolidation. It has nothing to do with predicting where price will go, really, if you think about it. I mean, obviously a little bit, but it's not about where price will be a couple minutes from now. It's not about whether this pivot will break, whether it will bounce off this support, resistance, whatever. All the words, It's not about all the words. It's trading within the structures on their way up or down, and it's reverting candles during consolidation without having to get it to go from the exact top to the exact bottom. The problem with that on low volatility is on a day like today, where there's 3-point intervals, suddenly that becomes trading big moves. And it's not really realistic to do 1.5-point targets. And as I showed you with the pictures, by increasing the time of the chart, we suddenly got the desired volatility amount, even though nothing really changed. So the trades will be held for longer, but at the same time, it's doing the exact same trades. I'm hoping today was an outlier, but even if it wasn't, volatility is certainly down a little bit compared to what it used to be. It wasn't that long ago where I didn't start trading until the morning range had exceeded 30 points, and we had 15-point intervals. Recently, I've been trading with 6-point intervals, and if I was still following the old rules, I would just never be trading, because price is no longer moving as much as it used to. And that might change, might not, but we have to adapt either way. And increasing the time frame a little bit does that when volatility is down. And when it's up, I'll go back down to the smaller time charts, because 3-point intervals is no bueno. I will start another trade day evaluation at some point. I might trade on my actual account just for a little bit, or maybe even sim. I don't know. I'll figure that out. Just want to give you a little update and share the concept that I've been thinking about. Yeah, I think that's about it. I appreciate your support, and remember to never give up. All right, I'll see you when I see you, probably tomorrow.